Okay, good morning, everybody. It's Monday, February 14th, 2022. Happy Valentine's Day to everybody out there. We're going to get started here with our pre-market analysis on the S&P 500 futures market. So let's do our usual. Being that it's Monday, I'm going to take a look. I'm going to scrutinize those higher time frames a little bit more. The thing is not much has changed from last week from a higher time frame perspective because we still have not really gotten out of this 42.12, 42.12, 42.13 to this, 45.80 area. So it basically looks, I'm pretty sure it's going to be looking the same here. So yearly hasn't changed, right? Our 3 month chart here, we're still prices down here, whatever, let's just say right around 4,400 right now. 50% of the current candle that's still in progress right now that will close at the end of this month is up here just around 4,500. So we're about 100 points below the midway point of the candle. And then the previous 3 month candle there, you can see we're also just about at the same spot, right? Just around 4,500 is 50% of that previous candle, and we're still way below that. So that's all I could say from this quarterly. Really, not much else to bring to the table this week. We still have the potential that the market did push to a significantly higher high, but the RVI is still pushing down significantly. So there is that little bit of hiccup or a little bit of exhaustion showing up from that quarterly perspective. Let's go ahead and come down. Like I said, there's probably not going to be much new on the higher time frame since we haven't moved very much on this monthly chart. Just to kind of reiterate what we've said probably since November of 2021, starting to see a lot of exhaustion building up at the highs of the market. And sure enough, we did get the correction, and we have that really strong bearish engulfing monthly bar, which coming into February was not a good omen for, a bullish continuation. And so far this month we've been somewhat contracted compared to the ranges we've seen, and have not really made a decision here as to what direction we want to take things. So hopefully as we get closer or we get to the shorter time frames, we'll get a little bit of a clearer picture, but let's see. We'll go down to the weekly now, and we've spent plenty of time talking about this potential, what I thought would be a potential reversal bar back from the week that closed January of 28th. And now we come into, so we got a little bit of follow through, and then we talked about the trouble area being that 45.70 to 45.80 area. We tried to break through, and then that next week closed, to me, looking somewhat bearish, having a lot of trouble kind of staying up at the top of that candle and closing right around 50% with that huge wick right at our expected resistance area. Everything to me kind of pointed bearish. And then next week you can see the bulls tried to go ahead and come back up, and this in my opinion is very similar to a peak above and fail here. We came just in front of the high from the week before, could not push through it, and sure enough closed at the lows of the candle with a huge wick. So that, in my opinion, that's a really nice bearish weekly bar right there, which is bringing us here now into this week right now. So things aren't looking great from that perspective here, and being that we failed right in the 61.8 retracement of this whole leg down, being a significant resistance zone, basically an expectation of trouble there, and getting the failure, not really good for an expectation for higher. But there's, anything's possible in the market, and just look at the current leg that we're pushing in. We're sitting right at the 61.8 retracement from the leg up. So this is a critical little area here to watch, because if there is some strong bullish participation at the beginning of this week, we very well could end up getting some follow through, right? And what I'm noticing here and this is a very high time frame, so it will take time before it actually closes. But if this chart was to close the way it looks now, it will at the end of this week. We'll have to come back and revisit it. But right now, if it was to close, we have a really clear bullish divergence on this weekly chart. Now, you guys know the caveat to that is the market could still come all the way down and test that low at 42.12, and there's potential we could still see that argument. So again, from the higher time frames, this might not be the most actionable thing to trade at the moment, but it's something we want to watch, especially if the shorter time frames all start to come into alignment here. So I will monitor that throughout the week. Outside of that, I don't see anything else to mention on the weekly here. Let's go down into our daily time frame. And now you can see just a little bit clearer what ended up happening up at this critical 61.8 retracement area and that major swing low. You can see we came up into it, came up right into, I believe it was 86 even. Pulled back, we held 38% of the leg pretty much to the tick. In fact, this was our expected support zone as we were pulling back, held it, tried to come back up, and then couldn't even break the high, even test the high, failed a point in front of it, and now here we are. Now, as we pull back, we're going to talk about these retracement levels because we mentioned them last Monday. So if anyone was here last Monday, you should have had targets to the downside once the market got through that major swing low that I think we were also looking at last Monday. So you should have been aware of the first area that we bounced at 4,400 and now the area that we're bouncing from in the overnight session. So we'll get into that, but I just want to finish up this daily analysis. The high that we first put when we first pushed into our expected resistance zone up here around 45.80, we got very clear bearish daily pattern and a very clear bearish 4-hour pattern, and then it seemed to show up at every time frame. We saw it on the 60, we saw it on the 30, so all the way back here when we first tested that zone, we had a really strong multiple time frame indication that that was kind of it for the bulls, at least in this local area. Now on that second test, we said last week, maybe you couldn't make the strongest argument for a bearish divergence. You could still argue it because we basically have the same high, but the RVI is significantly lower. But even if you ignore that perspective, you can still look at it like the market tried to come up, right, and just could not get through and got this really strong rejection. So not, again, not a good thing for the bulls. So let's start getting into the intraday time frames here and start looking at kind of what's going on here. So first of all, we found on the pullback, after we attempted to push at the kind of midway last week, we started failing. Notice where we bounced out the first time. We came down right into that 46 area. Remember, that was the major swing high from a few weeks earlier. We held it and tried to bounce out again. So that was now like maybe an argument once, twice, even 3 times trying to hold 46, and again failed. And notice where the market failed, and this is why I love Fibonacci. If you look at the retracement down for that leg, the market came right up to the 50% retracement right there around 19. In fact, the high was 20.50, and the 50% retracement of the leg from that pullback was 45.19 quarter, I believe, if you draw it perfect tick to tick there. So came right to the 50%, failed, and then came down, and you'll notice 44.15, we're going to get into that, is exactly where the market bounced, the 27 extension. And then it came down and looked like we just probed through the 61.8 here, but just amazing stuff from a Fibonacci perspective. Now looking at what's going on at the moment, you can make a bullish argument from the low we just made in the overnight session on the 4-hour chart. So I am kind of watching that. It doesn't mean I think the market's gonna, completely reverse from there. But I am watching that. I don't necessarily see a nice agreement up on the daily, but I am going to keep that in mind. And I want to go over, and it might make more sense to go on the 60. So I'll go down to the 60 here. So the only thing I'm seeing on the 4-hour chart is there is somewhat of a bullish argument. So if we see a whole bunch of bullish arguments from that low, we'll get a little bit of a confluence there, and that will be a very important level. Now, it's a really important level from a number of other perspectives, so let's get into that. Let's go down to the 60-minute, and let me just see if there's anything else to mention from the 4-hour. Oh, let me just mention this really quickly. We talked about these areas of consolidation in the market. I also say they're technically considered balance zones, consolidation areas, areas where there's a lot of structure in the market. And we've already kind of established where we got these zones from and why we have them on the chart. So remember, I made the box right around, again, 44, 46-ish up into this 45.20. We had a box from around 45.20 up to 45.70, 45.80, right? And then we had these ones down here. Well, I just want you to look at where all these boxes basically start and end, and look at where the market has the most significant support and resistance, pullbacks and bounces from, right? So we held the bottom of this box and the top of this box, and that was that 46 zone. Okay, we failed. We came down. Now there was a 50% retracement here, and we'll get into that, but came down, and look where we're bouncing right now, at the bottom end of the next box and the top end of the other one down there. So we're literally bouncing. If I could shift this over here, right at where we would expect there to be a bounce, right there, right in between the two boxes. So from that perspective, perfect area to bounce. Again, basically held the back end of this one a million times, came down, bounced right at the bottom, came down, bounced right at the bottom of this one now. So just really cool stuff. So let's look at this whole situation down here. And I remember Monday is the day that we spend a whole crap load of time up top looking at the bigger picture. So I am going to spend a little bit more time just kind of reviewing all this stuff. But we will get into levels and stuff for today. So that's coming. So here are our major eye levels. I remember the retracement from that 42.12 low all the way to the high at 86. We had the 50% retracement sitting right around 4,400. So if you were here, I don't remember if I mentioned it Monday. Yeah, on Monday I mentioned if we sell off, Monday of last week, if we sell off right around the 61.8 retracement, we would have an alignment of the trend line from the major lows going all the way up. We'd have this really nice alignment back here. In fact, let's see. 1, 2, 3, 4. Yeah, somewhere right around here. We were, I think, over here on the chart. If we pull back and break through 46, which was our first critical level, and we could pull back and get through 44.15, which again was a perfect area for a bounce that came up for like 30 or I think 20 to 40 point bounce from 15. If we could get through there, we had 50% of the whole push up, and 50% of the whole push up happened to be right around 43.99. The market ended up bouncing right down here at 43.98 quarter. All right, so it went right through 99 by 1 point and bounced up and pushed literally over 30 points. So right off of 43.98 there, that was our eye level, and then came up, just did not have enough strength in our overnight session here, pull back, and then in the overnight session, that major zone that I was licking my lips over down here, 43.55 to 43.60 that I have shaded in here, was the next expected support zone, and that's pretty much exactly where we're bouncing right now. And remember, that came from this right here. If you look, there's a major kind of rejection from that area in the market back there. Again, it was a 61.8 retracement almost to the tick. The 61.8 was 55.50, right? And the low there was 54, so probed right into that 61.8. And then again, it was the top of our chop block right there, our area of structure in the market. So pretty sweet how everything is working out. And I think that's a pretty good little review of everything that happened last week, and the levels that we told you to pay attention to, why they're important, and how you could derive them on your own using Fibonacci, market structure, and then just basic, support and resistance. So let's take a look at what we're dealing with for this week now. If the market is going to end up finding support where we're bouncing from right now, and we zoom out from this bigger perspective, you know what I'm going to say here, right? We're bouncing out of that 55 to 60 area. That was our expected support zone. In fact, I was hoping it would happen exactly a week ago so we could meet up with the trend line. But if they end up bouncing there, we have this area, which is our 44-46 zone, which should sound familiar to you. It might be a little bit of a range up in here. The actual swing low there is 44.5450. So if we do bounce out and we get through the overnight high, that's going to be that first area of trouble. If they end up getting through 43, let's say 44.50 area, give or take a few ticks, a few points right there, it opens us up right back to 45.20, which was Friday's high, and then it opens us up right back into the 45.80 area to retest that double top that we made. On the flip side of things, and let's see how far that is. That's 200 points to the upside. So I guess within about 10 minutes on the S&P right now, we could probably be up there. But I think within 200 points, we'll have plenty of time to then get concerned with what's above there. But pretty much, if you go back to last Monday's pre-market, again, I have all the recordings on YouTube. You'll see what other levels we're looking at above there if you're interested. I mean, it's just going to open us right to the top into this messy area, and then it brings us right to that last area of strong supply right around 46.60, and then we're up into that next structure zone. And the 27 extension happens to generally align with that area. So just keep in mind, if we get through the double top that we made over the last few weeks, that opens us up into a fairly choppy area until we get up into, I would say, right around 46.70, give or take, right? On the flip side here, if they end up not being able to hold from the overnight low that we made, again, off of that little area that we expected to hold, if that ends up breaking, then that opens us up, in my opinion, let me go down here to the 60-minute. If we break, I think overall, we can expect a push to test this major low somewhere around 42.50. Let me get the actual number. 42.63. So maybe a little range there around 42.60-ish. If they can't hold there, then we've got the naked swing low all the way down at 42.1275. But there are some levels in between. So let's take a look. So there's the major low from the overnight session. If that breaks, we've got a 43.2450. Wouldn't be too surprising to see some kind of reaction there. And then again, there's the major low, 42.62. And then we have 42.13. That's the naked swing low down there. 62 in between 62 and the naked swing low at 13. I think there's a good case for a level around 42.40. So these are all the potential levels that I think you're going to see the major turns in the market. So you're going to want to pay attention to them this week. Again, that would bring us 200 points to the downside if we end up coming down. So that gives you a 200 point range to the upside, a 200 point range to the downside to pay attention to coming into this week. And there's one final relevant thing I want to mention, and that is the retracement of the whole push down is probably going to be relevant here. So I just want to take a look and see, do we have any confluence, like really nice, beautiful confluence with our levels. And if you take a look here, pretty much we've got a nice 38% retracement lining up with this. See this major swing low back here from February 4th or whatever it is, give or take a few days there. That swing low right there happens to be exactly the 38% retracement of our whole push down. So the fact that that's lining up there, the fact that 44.46, once again, that should sound very familiar, is right there. That little box to me looks pretty relevant. Just like the box down here that we just bounced from in the overnight, I thought was relevant last week. The same case for this right here. Major swing low, 38% retracement, major eye level. everything's lining up there. And then we have the major swing low up here at 44.50, 450. So that might be relevant. And then 50% of the previous day is just a point and a half above that, or 2 points above that. So we've got a couple little zones to pay attention to if we push up this morning and get through that overnight high. And then again, I do like how the retracements of the entire leg are essentially our eye levels almost to the tick. So we have the 50% retrace at 68 up into our level at 74, and then the 61.8 retracement is basically our eye level at 96, right? So we've got those levels in the most immediate area of the chart to pay attention to. If the market starts to push, these are the levels that we're going to expect there to be some type of contention for the bulls. And then going down below us here again, I think we highlighted the most relevant areas. The fact that the 61.8 is sitting there right around that 42.12, 42.13 swing low is nice. And this 27 extension, again, we see this stuff line up all the time, and we see the market react almost to the tick off these retracement and extension levels. So that 42.89, 89 quarter, for all we know, could end up being a really nice ledge to get a bounce from. So I will kind of keep that up on my 60-minute chart in case we do come down there. It'll kind of alert me. So that's what we have going into the week here, guys. Still, basically for 3 weeks now, we've had the same range. So we'll see what ends up happening here. I'm not going to give you one argument over the other that we can expect the market to break out to the upside, or we can expect it to break to the downside. I think anything's possible. We just want to know all the relevant levels that we have on the chart so that we can basically play these guys on the back end and the top end. So unless there's any questions, we're going to jump down to our member section and start seeing if we can find some trades coming into the open here. So if you want to join us in the trade room, just send me a message and we'll get something worked out. So have a great week, guys. We'll be back here on Thursday to do another pre-market. And I think that's all I have. So take care.